You can never trade without confidence. And I've had over many, on the trading floor and behind the screen, I've had my confidence rocked many times. Many times. It's going to happen. You can't trade without it. So you can't focus on a bad day because it will snowball. It will snowball. If you try to get it back the next day, if you have a really bad loss, you can't do that. You can't. That's why I tell people, you try not to put certain dollar figures on things, because we spoke about this last time. I want to make 300 a day. And you do that Monday, Tuesday, Wednesday, and then you lose 2,000 on Thursday. Well, first off, you just gave away everything, and now you're down for the week. So if you come into Friday saying, oh, my goodness, I wanted to make $1,500, but I'm down 11, I got to make $2,600 today. You're dead before the market even opens.
This episode of the Speculators podcast is sponsored by Jigsaw Trading. Jigsaw Trading is an industry leader when it comes to order flow tools, training, and equipping traders to make better trade decisions. And if you've ever been trading and just feel a little lost and feel like you're missing something, and maybe you've been drawn to order flow and intuitively you know that it's important and that you should be learning this, but it's just a little overwhelming because of how it moves and because of the numbers, and you don't really know where to start. I get it, but you need to check out Jigsaw Trading. On a personal level, my first exposure into order flow and the idea that this is important came directly from Peter Davies, the founder of Jigsaw Trading. And even through to today, most of what I do with order flow and my thoughts around it came directly from Jigsaw. We're gonna have more to say about Jigsaw later in the episode, and I'm gonna give you some direction on how you can access free order flow training starting as soon as today. But for now, let's get started with today's episode. I'm very glad that you're here. I hope you get something from today's conversation, and a big thank you to Jigsaw for sponsoring the episode. Let's begin.
Mr. Paul, welcome back to the channel. How are you?
I'm good. Thank you very much for having me back. Happy New Year.
Thank you. Thank you. I'll tell you, I do so many of these first-time guest appearances. When somebody comes back, it's like a little family reunion. It feels like familiar. It feels comfortable.
It does, and I'm happy. You asked me back.
Yeah. Good.
A bunch of good things to talk about today.
Yes, I hope so. And I think last time you were on, it was, I don't want to say a waste of your talent, but a lot of questions, just kind of finding out who you are, laying some groundwork. So yeah, I hope we can go a bit deeper today. And I very much look forward to taking a look under the hood and kind of seeing what you got and learning a lot. So I've got a notebook myself, and I look forward to picking your brain. You did say Happy New Year, and I know that we haven't talked for a few months now. So how's everything been since the last time we talked a few months ago? Catch me up. What have I missed? Fill me in.
Well, things have been good. I have a new grandson, so
Ravaletta.
That's nice. After having 3 daughters and a granddaughter and a wife, it's nice to have a little boy around.
Yeah.
So that's certainly new. As far as work goes, the room is still doing really well, still trying to grow it. The market has done pretty much, I think, what we thought it would do when you and I spoke about 4 months ago or so. How we rallied pretty hard in November into December, and now again, obviously, so far this month to start the year, as we continue to hit new highs. So things have been going good as far as that goes.
Yeah. Okay. Very interesting. Were you able to? You traded today?
I did trade today.
Yeah, and focused primarily on the S&P, or?
I've been trading. So I trade the ES and the NQ futures.
Yeah. Okay. How did today go for you?
Today went well. A little curveball when the market came in. I'm not surprised the market came in a little harder than I thought. I didn't expect to fill the gap that we had in the ES. NQ held their gap. But that's something we could expand on in a little while, because I think so many people try to pick market tops. And I think today was a good example of where you could have gotten in short at a certain point and done well.
Interesting. Yeah, no, I would love to talk about that as well, because for sure, catching tops and catching bottoms, that's just a difficult game, a very difficult game to play, for sure. So to kind of just catch us all up and come back on the same page, and if anybody hasn't seen the first episode, for one, pause this and go watch that one. No, I'm just kidding. This will stand independent. But if you could, just kind of briefly explain your approach to the market, just so that we're all on the same page. and then we can start diving in.
Absolutely. So my approach, I'm a day trader. I've been day trading behind the screen for about 15 years now, 13 to 15 years. I was a specialist on the New York Stock Exchange for 25 years. That was a total new learning curve when I got behind. We spoke about that in our first chat.
Yes.
My approach is daily, and I use the market profile. I'm a market profile trader. That is my bread and butter. I rely on that 99% of the time. So based on that profile, I use a lot of the market generated information off of that to place my trades, both to enter and to exit. And so that's really my approach to trading. And I do it both on the ES and the NQ futures.
Very good. And when it comes to profiling, market profile exclusively, are you using the volume profile at all?
I look at the volume profile, but I'm more of a TPO guy, time price opportunities. And again, that goes back to when I used to trade the SPY prior to trading futures. The SPY volume profile was useless to a point because the opening print kept the volume POC skewed from where it would be on the futures. It has big prints during the day, and then the closing print is also large. So it always distorted the volume profile. So I was always used to the TPO and basically carried that over to the futures.
Yeah, very interesting. So from your perspective, the reason you use market profile over volume profile, is it exclusively just because this is what you've learned on, this is what you're familiar with?
Yes, absolutely.
Yeah, okay, very good. What would you say, would you agree with the fact that the market profile is the first thing that was brought forward when we had maybe this idea of looking at real-time market generated information and being able to categorize it in this unique way? And when it launched forward, we didn't have the data capabilities to see every single price, how much was happening. So we chunked it off into these time frames, 30-minute chunks. And then as technology evolved, we now have the ability to see every single price, every single transaction that's happening, and this can get delivered right to your home. And so the natural evolution of the market profile was the volume profile, where we could now see this. And in relation to market profile, the volume profile is just a natural evolution of what the market profile gave us.
Right. I do agree with that 100%. With the evolution, the volume profile has definitely become more prevalent in a lot of people's trading. But again, when I learned the profile back in 2011, it was all based on the TPO. Now I learned the volume profile also, but the TPO, to me, I liked it better. I think seeing the TPO point of control move is a little more anchored at times, whereas volume POC a lot of times catches up later. You see that a lot, where the TPO is being raised or lowered, and then later in the day, the volume POC might follow. So it's nice to have them both go in the same direction at some point to confirm a move. But I think the TPO, for me, gives me a better guide earlier as the day is forming.
Yeah, and it's a beautiful thing. I think that it's misleading to say that, there's no wrong way to do things, because there's a lot of wrong ways to do things. But when we're talking about the right way to do things, there is not this exact blueprint. And I feel like I've been having this conversation a lot with a lot of different traders, how it is so important to get ideas and to learn things, but then there has to come this radical self-responsibility where you have to be doing something that makes sense to you. And in a lot of cases, there can be different versions. And in a sense, even with, I think, you and our styles, maybe a good way to say it is, we can be brothers and sisters without being twins. And I think in a lot of ways that's the natural outcome of it. When you're looking at the, let's say, profiling, the way that you're profiling, the individual day profiles that will shape up, let's say micro composites, where we're combining 2 or more sessions, and then a composite profile where we're maybe bringing in hundreds of days worth of data. Are you using those 3 versions of the profile, or what does that look like for you?
I'm basically using the day's profile versus the previous maybe 2 to 3 days. I'm not more of a longer term profile guy, like putting 2-3 weeks together or things like that, because I think as a day trader, all the information that I need is going to be based on the day that's forming in front of us and maybe the previous 2 or 3 days to see if we're coming, especially if it's in balance. If you're not in balance, then that day's profile, like today is a perfect example. Today's profile is strictly what I looked at early on. When we had the gap, we had value, we had the POC being raised, we had the overnight high, the IB high. All those things are telling me at that point that longs were to play early on the day. Then that obviously changed. But we still stayed for the most part, except filling the gap late in the day in ES inside of today's profile. So I'm basically that day's profile and maybe a couple of previous days to that.
Okay, very good. So when it comes to low and high volume nodes, are these an important part of what you're monitoring?
To a point. I know, a lot of people in my trading room like to look at those over different time frames, over different days, weeks, months, and things of that nature. I don't really do that. I think, again, the volume for that day, that's more important to me than, seeing where it's building, where the top 30, 40% volume is building versus the least amount of volume is more important to me than a high volume area than, say, from 3 months ago or something, or 3 weeks ago.
Sure. Yeah.
That's me. Again, I'm pretty simple. I'm pretty basic. And I tell people in my room, obviously, whatever works for you, you shine up and you go with it, right? I'm never going to say something's bad to do, but I try to keep things pretty basic.
Well, I'll say it. I'll say things are bad to do. And I'll tell you, I think very few traders that I've ever met, especially on the come up, are erring on the side of keeping things too simple. And a lot of just so much wisdom. And this is something that, if I look at my evolution in my trading, has just been this constant process of clarity and refinement, and not simplicity at the sake of losing sophistication and not having your edge, but simplicity in the fact of, even like you're saying, I'm a day trader. Do I need to know what's happening months and on these very large time frames? Is there a piece of information that's going to help me make a decision right now today? If yes, great. If not, what are we doing here? Because at the end of the day, we have to eat what we kill. We have to make money today. And
that's how I look at it. Yeah.
Yes. Very good. So talk to me about the volume weighted average price, VWAP. Does this come into your analysis at all? I used to just put this together as, when I thought of profiling, VWAP was like the volume profile. VWAP was just like an integral part of that. There was never really a volume profile that I had that didn't have VWAP on it. But VWAP has become so popular, and I think that it's even the use case for me has evolved quite a bit. And now I'm starting to treat those as different things. What is your take on VWAP, and do you use that in your analysis?
I have it on my screen. I usually have just the daytime. I don't have it for the consolidated session, overnight and day. I usually just have the VWAP for the day time frame. My take on that, again, I go back to the trading floor where we used to have traders come into our crowd, and the goal for that customer was to beat the VWAP. Right? If they were long, they wanted their price below it. If they were short, they shortened it. They wanted it above it. But what happened, and what I saw a lot of, that customers, if they didn't beat it, these brokers, they gave the customer the VWAP price to keep the business. They were making enough on commission where, if it cost them here and there to give them the average price, rather than, if the average price was 50 cents and their average price was 60 cents, they'll lose that dime on how many shares to keep the customer and keep the customer's business. That kind of jaded me a little bit. It kind of told me how important really is VWAP if you're going to be paying, paying the customer whatever it is. So to me, I look at it, but it's not very, to me, half back is more important. To me, the TPO is more important. The opening is more important to me. If we're holding it, if we're not holding it, if there's no conviction back and forth through it. So I will certainly look at it, and I know it's there, but it's not something I lean heavily on.
Yeah, very good. Yeah. And I think that under that idea of trying to get a good price, and at the end of the day, making sure that we're getting in at good levels, there is the majority of the time, especially if we are in some type of balance where trying to lean against or enter at VWAP is a very difficult price to not expect that you'll get chopped out of or to try to hold on to, because you're getting in right in the, the popular price that everybody's getting.
Well, exactly.
Yeah.
It's kind of like getting involved at the point of control. I mean, I try to stay out of there. That's a good place to exit a trade. But
yeah,
otherwise, that's a way if people do get chopped up a lot.
Yes. Yeah. And these are important ideas. I think it's very easy to learn some concepts about profiling or to learn some concepts about VWAP, and then to just go out in the market very half-cocked with these ideas and to do very bad mistakes, like getting in and out, just in the middle of value for no reason, entering at a point of control or high volume instead of using those as targets. And I've found that the volume profile for the years that I've been doing this, it's just this evolution of maybe even at the surface, not overly complicated ideas, but things that you can just continually go down and strengthen and refine and become more and more equipped with that same amount of information.
I think people have to take what they feel is really important and, like you said, refine it. You don't want a million things, because again, I think that hurts too many traders when they have too many things they're looking at. But and again, it doesn't have to be just a TPO. It could be anything, but use it to your advantage and taper it down to and refine it down to a certain number of things to look at. That's going to give you an edge.
Yes, yes. Now, you mentioned the open, and the open is a very important price to me as well. And I think today, specifically yesterday, would be some good examples of the open just being tested so many times. Specifically yesterday, it just got tested. I mean, you could almost have a good drinking game after taking a sip every time the ES defended the open from underneath. When you're in a situation, and maybe just answers however you'd like, but when we are opening and we're not trading through the open, it's clearly having a difficult time with the open. Does that give you any kind of a rule or something that says, we've tried so many times to get above the open, we're holding it down, longs are off the table for me? Or how are you looking at the open information, especially in a situation like yesterday where it's an incredible amount of testing?
Well, back and forth through that is a lack of conviction, and that doesn't give me an edge whether I want to short or long, either short below it, long above it. But there are many times when the opening combined with other market generated information is a great play, where you open up, like you said, you push down. Now again, there's other factors that are certainly going to be important to me. If value's starting to build, overlap into lower. If we start one time framing down. But any push up towards the opening for me is a short until they prove they can get back above the opening. If there is more market generated information telling me that short's the play, then any push up to the opening, I'm shorting it. And vice versa, if we're above it and we start one time framing up and we pull value up, if the TPO starts getting pulled up. So that's how the opening is important to me. Early on, if we're going back and forth through it, it's kind of like a boxing match. I tell my room, I use these 13 time frames as like rounds in a boxing match. If you keep going back and forth through the opening early, it's like they're feeling each other out the boxes and nobody has an edge yet.
When we're talking about, real-time market generated information, which I wish was a bit more popular. I think that it's not as cut and dry or as easy as to explain in these little, snippets of information. But I think when you look at the screens and you are able to put together a level of context and to understand where there is an edge and what is most likely to happen next, and then you're able to execute on that edge, the amount of conviction you have while that is playing out, and just the level of interest and excitement may be the wrong word, but the level of this being a very interesting thing to do goes up dramatically, as opposed to sitting at the screens and I'm just waiting for this to give me a signal so I can push a button. That to me would not be a very exciting way to spend my time, but the sitting on the screens, virtually looking at the same thing every day, and every day being some version of unique, is just fascinating. And this is something that I love about this as a business. But when we're talking about real-time market generated information, maybe just using some hard examples like today, we opened up inside of a gap to the upside. Could you just walk us through, when you come in and you see this, just what was your process of putting together, what was the context of that gap open, because it's not happening in a vacuum, and how you used or what you did to come up with how you were going to plan to attack the day.
Okay. So the first thing, and I said this last night in the room, and again in my videos last night and this morning, we had an inside day yesterday in ES.
Yeah.
And we're at the all-time highs. The market finally consolidated yesterday, right? We didn't really consolidate on Monday. We were above Friday's real push up. So yes, it was great consolidation. I said, so today when we come in, I'm hoping we open inside of yesterday's range so we can come out of that inside day and get some really good push one way or the other. Mm-hmm. Unfortunately, we gapped open today. When you get a gap and it's a decent sized gap, it sucks the wind, it sucks the energy a lot of times out of the trade, right? You gapped out of an inside day. Gap and go, a lot of people love that, but gap and go last year and so far this year have been an absolute failure. They really haven't provided much right away. So I told the room when we open up today, I'm certainly not looking to short it, but with a gap of that magnitude, I'm not looking to long it just yet either. I didn't take a trade in A period. I did not take a trade. B period is when I started looking and seeing, are we going to hold the opening? Are we going to hold the gap? Are we going to try to one-time frame up? Once those things start happening, then in both of them, in both ES and NQ, I was looking for longs. And especially once we got the overnight highs, that's important to me. So we got the overnight high, we one-time framed up. Now I'm looking for longs on any pullbacks. That will not change until we get back below the opening or we stop one-time framing up. So the second, third, and fourth time frame for me were very good because the market on and again they weren't pulling back a lot, especially in NQ. But when we were getting pullbacks, I was comfortable to be long, and I was telling the room that I'm like, we're in uncharted territory here. There's really nothing to lean on to look for a short. Now, again, early on, right on the opening, I'm not looking along in either right away because we're just starting to paint that picture. But once we started getting more MGI with the one-time framing, with the overnight high, with the gap holding, those things were giving me more confidence on any pullback to take along.
Yeah,
that stopped in G. I'm not sure what profile you use or whatever, but that stopped when the one-time framing stopped after we hit the highs of the day in midday. Something changed there, and that's where I was talking about picking market tops. So many people, for God knows how long, I've been trying to pick tops. You know, it's a losing game, just like trying to pick bottoms. But when we stopped the one-time framing up this afternoon, when we hit the high in both ES and NQ, and I pointed this out to the room. Now, I was in buy mode most of the day, so it's hard for me to just flip short. But
sure,
the people who are just dying to be short this thing, saying that we can't go high, and they're getting crushed. When we finally stopped the one-time framing, in ES, you could have taken a short around the 60 level. And you could have used it two time frames prior high as your out. It was like a 3-point risk. Well, if you took that short, we went 30-something handles lower without stopping. We never stopped one-time framing down. And it was the same thing in NQ. If you took the short when we stopped the one-time framing up, and use like now NQ, you have to have a lot bigger risk. So, to me, it's minimum 10 points, sometimes 20. So you could have used a 14-point risk. There was over 100 point to the downside. So we talk about risk rewards of 2-to-1, 3-to-1, 4-to-1. Well, my goodness, that would have crushed it. So, and I'll make you a bet that, and I said this on my video, I'll make you a bet that people who've been trying to pick tops didn't short those pullbacks at that point because they just want to short highs. So when they saw the market coming in, you know what they probably did? They probably longed it. So again, that's MGI, that's priceless, and how it turns a market around intraday. I have that checklist sheet that I use that I always tick off: gap, value, overnight high, IB high, POC being raised, all those type things, single prints. And once you stop, you fill single prints, you couldn't hold the trend day up, you stop the one-time framing up. Well, now some things have changed. That's where you should be looking for your short if you really want to be a short seller.
If I could stop you and back up a few things here, because I I don't want to derail too much because I want to continue what we're saying, but I don't want to miss this. You talked about, and it's just great to hear the thought process of taking into these pieces of information and then making sure that something makes sense for you. Yeah. Making sure that, hey, listen, we're not just in this gap. This gap is happening by every metric, very hard thing to say, but we are, what I would say, is overextended. Putting together those pieces of how you're going to handle it. You talked about the overnight high being important. I'm assuming the overnight extremes being important to you.
Mhm.
When are you using those primarily as if you have an idea that's a great target, if it's in that direction, or is the most important thing to you when and if we reach one of those extremes, how we react? How are you using the extremes of the overnight?
Both things you just said. I'm using it as a target. So if we start going towards it and stuff, I'm looking now. A lot of times we do front running. So when we opened up today, if you notice, ES front ran their overnight high. They do it a lot, and NQ didn't, but just barely got it and came in. So a lot of times early, I'll take a short against that because they love to front run them, either the overnight high or take a long against the overnight low. Now, I didn't do it today, but when we backed off and didn't get it right away, to me, once more MGI starts coming in, now I'm looking for the long to go get it. Second time up there, we should get it. The market is that strong with value gap. It shouldn't be that hard to get. So yes, it becomes a target for me. Then second, it is to see how we react. But once we get it, and we're putting that along with other MGI and stuff, even if we pull back from it, I am still looking for longs, because I think once you get the overnight high, and I kept the stats all last year. Now we got both overnights today, but it was late in the day.
Yeah.
But we only get last year out of 150 trading days, you get both overnights only 23% of the time. So the odds are in your favor on pullbacks to still be looking for longs. Okay, so those two things. Yes, I use it as a target, and then I generally use it as something to be comfortable with if it pulls back from there on a strong day. And today early on was strong. It obviously changed later in the day.
Okay. And thank you for explaining. In terms of, you said, okay, when we see this, something has changed. And in a trying to catch tops or bottoms, which, wouldn't be the right way to say this, but being able to recognize that this move to the upside is potentially done, and I want to get in on this. You talked about a checklist, and you being able to interpret that this is potentially over. I'm assuming it's not just one thing you're looking at, but it is maybe a series of things, and maybe on any given day, it's one thing. On any other given day, it might be 3 or 4 things. Could you just explain a little bit more about what is your ideas around trying to catch a top or trying to catch the turn would be maybe a better way to say it?
Well, again, I think trying to catch a top is futile. So once you have something to lean on, which to me would be once we stop the one-time framing, now you could use that the high now as a very focal point, as if you want to use that to take the short and lean against that. On a day like today, I'm looking for an afternoon pullback low. I was wrong. Now, I still bought in the middle in some of those time frames, but for real specific reasons. Where I told my room, we were still above the opening. We were above that simple 144 moving average at the point at that point that a lot of traders use. So I was still looking for longs because I thought the odds, again, everything's about odds, thought the odds of getting a pullback and then going back up was still good. Now, that doesn't necessarily mean to make a new high on the day. I don't care if we make a new high. If we pull back 10, 12 handles, and then I take a long, I don't, if it goes back up 4 or 5 handles, I'm fine with that. I'll take those 4 or 5 points. I don't care about a new high. So that's what I was looking for initially. When I told, and I did it both in ES and NQ, but I told the room, here are my 2 levels that if we get below these, that game is over. And in ES, it was below, I'm trying to think what level it was, B's low or A's. I forget exactly what time. Well, no, it couldn't have been A's low because A was low today at the time. I think it was the second time frame's low. I said, if we get below that, game over. I'm not looking for longs. And in NQ, it was at a very visual area. It was at the opening. It was at the overnight high. It was at where the 4th time frames low was, where they rallied off of early in the morning. So if we get below that, forget that. And that did happen. Now I didn't turn short, but what I did do is just watch. So I did not get burned by looking for longs anymore.
Yeah.
So that certainly was what I was looking for to check when things change.
Yes, yes.
Does that make sense?
It makes perfect sense. And I think as trading, one of the easiest things to do is just to get lost into the sauce, kind of get married to an idea, maybe on a situation like this where the market is pulling back, having that idea and not expecting that the market is going to go coast to coast, almost directionally.
Right.
And if you're not careful, finding yourself the whole way down, being contrarian to price and just fighting the action, and having these anchors, almost thinking against yourself of where is this idea wrong and what would it look like for this to be off the table. And a lot of times it's not just the one trade that you're in, because maybe that one entry failed or something, but nothing's wrong with that general idea as long as we are above X, whatever. But having those clarity anchored points are really important. And this has helped me actually quite a bit of just that idea of getting lost in the sauce where we can try things. I also was looking long and taking longs on that pullback as well. And of course, there was all these obvious things where it's, this has to be off the table now. And also, just because an idea is off the table doesn't mean that it's time to flip the script and there's automatically something else to do. Exactly. Sometimes it just, this failed. I don't know what this is trying to do, but I know that, I got to look for a new idea and wait for some more MGI, as you say. Which I don't know why I've never heard anybody say MGI before, but I thought it's great.
Really? You've never heard that before?
No. When you first said it, I had to think about it for a second. I was like, MGI. I was like, oh,
it's a lot easier than saying market generated information all the time.
Yes.
And and talk about flipping the switch. So today, when we couldn't hold single prints today, I told the room, if we do go make a new high, I'm going to be looking to short now, because I think that is definitely something that buyers had trouble holding trend. So when we went up, I shorted NQ and it made a new high. I think it was F period. ES didn't make a new high, I don't believe, at that point. So you could have faded. I call it fading the edge, where you don't get a new high, or fading the extreme when you do get a new high. So I faded the extreme in NQ, which worked out because I didn't expect to go trend again after failing. ES, I did not short it, but it would have worked fading the edge below the day's high. So again, the fact that they couldn't hold trend told me a lot of what I was looking to do then at that point also.
Yeah, when it comes to the, let's say, very traditional market profiling and the 7 intraday structures, were you taking into account today that it was shaping up to be potentially a neutral extreme day? Maybe thinking through the idea that if we would break both sides initial balance, if we were going to fill that gap, again, there would be a potential for like a neutral extreme. Do these things come into your analysis?
It definitely comes into my analysis. I was not expecting, I thought the market was very strong early on. So I was not expecting the market to come back and take out both sides of the initial balance and both overnights. I didn't think we would. Now, I said to the room, you have a better odds of filling ES's gap because it's not as big as NQ's. I said, I do not believe we'll fill NQ's. And we didn't. However, NQ did take out both sides of the IB. It did not get the overnight low, but it did get its both sides of the initial balance. So I don't want to say I get stubborn. Sometimes I do, but I was a little surprised that we did take back the entire thing like that. But it definitely comes into my thinking, yes.
Yeah. And can we actually maybe talk a little bit about the balance here between just listening to the information and understanding that something is not likely, even if we're wrong about it. If we don't think something is likely, it's very hard to get involved in the market. And you talked earlier about, if you were shorting this, taking this all the way down, this incredible opportunity. And I think, is your perspective on when the market is giving us clear signs that, let's say you're in that short, was there any reason to be getting out of that short other than the fact that how would you expect, or how could you have reasonably put together that we were going to be going coast to coast and filling in the gap on the ES, right? How do you strike that as a balance of into a trade and or taking some kind of a position? Do you find yourself cutting things, let's say, short when there are these outsized moves, and just taking it as this is almost like a mini black swan event? I can't make money when the market is doing something that is outside my scope of what I think is possible. Or is that a failed opportunity and we should be taking better advantage of larger moves when the market presents them?
Well, that's a great question.
Let's take a quick break from today's episode because I need to ask you a very important question. Have you ever been trading, maybe up against the hard right edge of the screen, and you find yourself maybe coming off of a loss and thinking thoughts like, what is going on? I'm confused. I don't get it. You ever think those kind of thoughts? Of course you have, because you're not using today's video sponsor, Jigsaw Trading. Jigsaw Trading provides institutional grade tools, education, and insights to help traders make better decisions. And it's no secret that the best traders in the world are using order flow, sometimes exclusively, but they're using it at some level. And if you don't understand order flow, and if you don't have the tools to see it, you're just missing an important piece of information. Full stop. Jigsaw Trading is the real deal when it comes to equipping traders with the tools and education to trade like pros. And I'm talking about their award-winning trading platform called DayTrader. This is going to give you elite level order flow analysis, custom charts, automated trading analytics, and it was built based on techniques actually used by institutional traders to give you clarity into market movement. And that's just one part of the package. They also have Journalytics, the most advanced journaling and analytics system that is going to track your progress and help you identify your weaknesses. They also go beyond tools and resources with step-by-step video courses and drills designed by real professionals to shortcut your learning curve dramatically. So, whether you're a seasoned pro or brand new to the screens, Jigsaw Trading is going to have something for you. Oh, and did I forget to mention that they're giving away a free order flow training right now? All you're gonna have to do is click the link below, and it's gonna take you to a free order flow training where you can see what Jigsaw is all about for yourself. A big thank you to Jigsaw for sponsoring this episode. Make sure you check out their free video training. Now let's get back to the episode.
I base everything on odds.
Yeah.
I try to put the odds in my head, what they will be and how I talk to my room. And so like when we're early in the day, I had some people talking to me early in the day when we were still one time framing up, even though we couldn't hold trend. Well, what do you think the odds are of getting a gap in ES? I said, I think they're very small at that point. I said, I think they're, 10, 15%. I said, because the market is not showing us that it has that capability just yet. I said, you need, it's just like anything else. It needs baby steps. So the first step, okay, you don't hold trend. Then the second step is to stop the one-time framing. The third step for me was getting below the opening. Once it got below the opening, that told me now those odds got a lot better to go test the initial balance low and maybe even get the gap. So that's how I look at it. So early on, I would have said it's 15% we can get the gap fill. Once we got the opening and we're continuing the one-time frame down, then I would have put those odds minimum at 50-50, if not 55-45 to go get the IB low and the gap. So I wasn't looking for that short, like I said, because I was still in the bull frame of mind. And I thought we'd get more of an afternoon pullback rather than what we got. So I'm not upset. I made money on the longs in those middle time frames. But once it stopped doing, and those odds went like I said, against when the odds got better to take out the day's low, I just stepped away. I didn't, I don't feel I missed a short. I feel I escaped giving back money because I knew something had changed. So I was very happy with that.
Yeah. Something to be said about making your peace with that. And I think it's very easy to kick ourselves for things that, again, maybe they even are likely, but they're outside of our scope of maybe our experience levels or our skill levels to take advantage of it. So it might as well be not likely in reality, at least our reality. And we don't need to obsess about those or to overthink those because those aren't the ways that we're going to make consistent money anyway. Things have to be able to make sense to us, and they have to, somehow there has to be an edge. And if the edge isn't there, but it still happens, the market's a fickle mistress. Thanks for explaining it. Can you talk about trading other products other than futures? I'm pretty locked into it, and I know you've used to trade other things, but when we're talking about maybe the same the same derivative, so the ES in the futures market, but there's other places we can trade this product, whether it's an EFT, a CFD or an ETF. What is your opinion on trading those? Is there any reason to look into that? How does profiling work on these products with different volume? Any thoughts on this?
The profile will work on anything. I mean, unless you're talking about, a $5 stock that has a 30-cent range, then the profile is not going to be too productive. But I certainly used the profile when I was trading SPY. I used it when I was trading the options in SPY. You can use it on any stock. You can use it on Tesla, Netflix, Apple. Without a doubt, it's still going to give you great market generated information, a lot better than you'll see on a 30-minute chart. So absolutely, I think the profile, they use it in crude, they use it in crypto. So the profile can be used on anything that pretty much, unless you're talking about a penny stock or a very tight range stock or of that nature.
Okay. Would you say it would also work in, I know you said crypto, would you be under the impression that it works fine in a market like Forex, where who knows what the volume is because it's just all over the place?
I've never traded. That's a tough one for me because I've never traded Forex at all. So I really can't say, that it would work there. I would think it would, but that's out of that's above my pay grade on that. And even crypto, I said crypto, but I have heard people say that, the way crypto trades and stuff, I would think the profile would work on that.
For sure. Yeah. Very interesting. It doesn't surprise me that you've never dabbled with or traded Forex. You seem like a level-headed guy, smart guy.
I never traded crypto either. I stick to what I know, which is basically is the equities and the futures.
For
I'm
sure.
very happy with that.
When you are trading multiple products, even throughout the day, is it difficult for you do you ever get lost in the action, or is it difficult to monitor, or how do you filter that to where, is it no problem to have two open positions on different products going at the same time? Do you have a process of filtering that this is more of a setup for me, so I'm solely focusing on this one for now? How do you juggle multiple products that you're monitoring?
The most I'll trade is two at a time, which would be ES and NQ. Those are the two I'm solely focused on. I do trade both of them at the same time, but sometimes, not all the time. If I think it's a really, really good setup for both of them, I will do it. Like today, when we did make the new high in NQ and I took that short, I was looking for ES to make a new high, and I would have shorted that also. It's not the easiest thing to do, but I find myself being a lot better focused when I'm only on one. And like you said, sometimes one provides a better setup, which NQ did today when I took that short. So I only took that. But I'm not adverse to taking trades in both of them at the same time if I think they set up very nicely.
Okay. And then are you exclusively, like when you're doing your prep or just preparing for the day, are there additional products that you're kind of filtering through that will make its way focal for the day, or is it always exclusively NQ, ES?
It's those two. It's ES and NQ solely focused on. I'll break down what I do. I love looking at charts also, and when it's slow, my room is always asking me to break down a certain chart because they might have a position or they're looking to take a position. So I enjoy doing that. A lot of times I'll start not trading it. Sometimes I will, but I'll look at it and, just to keep an eye on it. We did that a while back. I did it in Chewy. Somebody asked me to look at Chewy, the pet company, and I looked at it. I'm like, you know what? This thing's been beaten up pretty good, and and I actually traded it, and I did well on it for about a week. So sometimes, I don't even know where most stocks trade. I'm so focused on the futures. Some people were talking about some semi stocks today, and I looked at the charts at $895 a share, and I'm like, oh my goodness, it's just crazy where some of these stocks trade. And I don't want to be all over the place. That's why I need to focus on what I do. But once in a while, I'll dabble in other stocks, especially when people ask me to look at them and I give them my advice. I'm like, I might as well put my money where my mouth is after what I just said to them.
Yeah, I don't see the allure either of trying to make things more complicated than they have to be. There's plenty of opportunities, doing right what we do. When you're trading, something that's been kind of a focal point that I've dabbled with for a while, and I think now this is becoming an actual structured part of how I operate every single day. And it's this idea of just earning my risk and starting off with more of a nominal size no matter what. As that day goes on, if things are getting off the rails, my size stays muted the entire session. And if things are working, I'm getting in flow, we are building a bit of a cushion. We are then using that to push into the day and go for profit target. Do you have a similar approach, or do you have any specific things that are dealing with how you're managing your risk that maybe have been realizations over time that you realize this is very important to me, or any inputs on the way you're managing your risk right now?
Well, absolutely. I generally trade or look to start with obviously one ES to maybe max 3 on both the ES and NQ. I'm not looking the most I'll ever take on either one of them is 10 at one time. That's my rule. I don't want to be bigger than 10. And that's when I tell the room I'm full boat. And that's only generally when it comes to a place where I am really either very happy with that location, or I did take that 3 lot and now it's come against me. And sometimes I'll get stubborn and say, well, I still think it's a good trade. Again, I'm not recommending this for anybody, but I'm still going to, here's my out is not here yet because I'm only long 3 and I'm comfortable with that. And now I will go full boat to go long 10 or short 10 at a specific level where now I know my out is really defined. It's probably not much lower than when I went there. So if I do take the loss, those 7 contracts I added on are only going to be a 3-point loss, although I might have lost a bunch on the 3 I originally took. So I'm happy with 1 to 3. Those generally pay me nicely when I'm hitting on all cylinders. But yeah, I'm absolutely looking at that type of risk at all times. And it's not a specific point total. A lot of times it's if we stop one time framing them out, if it gets below the opening them out, things of that nature. That's where I usually generally set my outs on. Everybody's got to be different. Think about it. If you have a good range and a good ebb and flow, right? I always talk about that ebb and flow trading, especially NQ. NQ could have a 50-point range for that time frame. Well, if it's coming in, but we're still one time framing up, I don't mind being out 20 points on a 1 lot. That's $400. Now, if I think we're still going to hold the one time framing, well, now coming in 20 points, I might buy another 3, 4, or 5. Because now I think my risk is less because we're getting closer, say, to the other time frames low where I know I'm out if that takes that out.
Yeah.
Because a lot of people keep getting stopped out on things, but the picture didn't change.
Yes.
So you have to be comfortable with what you do. Some people are only comfortable for a 4-point risk, and that's fine. But that doesn't mean your trade was wrong if you got stopped out because the one-time framing hasn't stopped. So that's something that people have to live with if the market goes back up in that situation.
Yeah, being able to separate the idea between an idea being wrong and an entry being wrong.
Mm-hmm.
Very possible that the idea is still completely valid, that entry just failed or was ill put on. And I think this idea, and something that's been just reinforced with me, is with this idea of earning my risk every day and just I can't see a reason to ever deviate from this now, is always making sure that I'm just in a position of strength when I am in doing something. And to your point of getting stopped out for no reason, sometimes we have to make these decisions when we are using a certain amount of size because we can't hold on and see how something develops if it starts working against us because we're maxed out for risk on this trade. So we have to be getting out. And to be in a position where things can work against you and you're fine and nothing is wrong and you can give that room to breathe, or because you didn't start large and now you're trying to dig yourself out of something, but you've built yourself a cushion. So if something does go against you, or we're still up on the day, these types of mental frames are so incredibly powerful, as opposed to, if this goes against me 3 more ticks, I have to hit the exit, and and then I'm going to be at my max stop loss for the day. We don't want to be in those positions, hopefully ever. Thanks for running through that. One thing I noticed about you, and I appreciate about you, is you seem to have a very sunny disposition. And
I hope if my wife hears that, she'll be laughing.
Okay, we won't let her in to shatter the illusion of my thoughts about you. No, but something about trading, and this has been today would be a perfect example of the market behaving in a way as doing something outside the realm of what I thought was possible, and definitely uncentering my chi while I was trading today, especially for that drop. And something I've had to actively work with is just not letting trading absolutely ruin my day, because it will. You can trade, this market will take everything from you, your money, it'll take your health, it'll take your mental processing power, it'll take everything you give it, literally. And I've definitely been in, I would even say, like, bad feedback loops of coming in, trying to be focused, the market kicks my butt, takes all my mental bandwidth, I can't even focus on anything, and it just kind of ruins my whole day, makes me kind of a crappy person. I, have a wasted rest of the day, and then sometimes that will repeat for, long periods of time if you're not careful. Roundabout way of asking a question, very long question, but when it comes to just not giving the market too much in terms of our money or our mental energy, or being able to have this as a sustainable lifestyle where, we're not letting the market dig us into these troughs, which it will if we're not careful. Do you have any thoughts about what that journey has been like for you, or how you safeguard against it, or if it still happens at times to you?
It definitely still happens at times to me. It has definitely gotten better in futures, but it still happens there. I mean, with options, I've done some really, really stupid things with trading and stuff that really hurt, which would really obviously ruin my day. There'd be days, there'd be times I just shut it down. I was still with my trading room, and I'll still be as professional as possible. I think I keep my ups and downs pretty good in my trading. I have a responsibility to them, so my P&L shouldn't affect how I speak to them. And I think if you would ask the majority of my room, I think I'm like that 99% of the time. There's certainly some times where you lose it, but it's very, very few. I get more upset at technology issues than my trading issues when my platform goes down or things like that. I try to, you're always going to battle it, right? Once you think you always have it, you're all set and everything's good, that's when you get smacked in the face. I think the best thing, and I try to tell everybody, is I try not to let a bad day ruin the next day. I generally come in, I won't go home with a position in futures. I haven't. And no matter how bad a day it was yesterday, I want to come in today and say, okay, I'm starting over. That's over. I can't do anything about that. I'm not happy about it. I want to learn from it, but I want to just start fresh today. Even, if I lost $5,000, I don't care if I make $300 the next day. You know what? I made $300. I got back into the green for that day, and you start going from that. Because if not, if you let things snowball, you can never trade without confidence. And I've had over many, on the trading floor and behind the screen, I've had my confidence rocked many times. Many times. Yeah. It's going to happen. You can't trade without it. So you can't focus on a bad day, because it will snowball. It will snowball. If you try to get it back the next day, if you have a really bad loss, you can't do that. You can't. That's why I tell people, you try not to put certain dollar figures on things, because we spoke about this last time. I want to make $300 a day. You do that Monday, Tuesday, Wednesday, and then you lose $2,000 on Thursday. Well, first off, you just gave away everything, and now you're down for the week. So if you come into Friday saying, oh my goodness, I wanted to make $1,500, but I'm down 11, I got to make $2,600 today. you're dead before the market even opens.
Sure.
Make $300 on Friday, and then on Monday start again, one day at a time. So that's the best way I try to safeguard against it, and try to tell people in my room also. I have some people actually doing this. I think it's a good idea. If you have a good day, and it doesn't matter what you're looking to make, get $300 bills, get a couple of $100 bills, 200, 2 of them, 5 of them. Put it in front of you when you make money that day. Just looking at that money is going to make you feel good. Now picture somebody trying to take that money from you later in the day. You're not going to let that happen. So why blow a good day by, unless you have a really good setup again. And I'm not telling you to stop trading, but focus on the fact you had a good day. And unless a real good setup comes, today's over. Now you start again tomorrow. Those things kind of keep me grounded. Now, if I was in a trading room, I might not have the sunny disposition every day, but I try to be very positive in my trading room, both when I make money and lose money, because it's an educating room. And so you take the good with the bad. And I think the room sees that.
All right. Very good. Let the dead bury the dead. No, those were some really good words. And it's actually a very interesting antidote there of putting the money on the counter, because one thing that is so easy to do in trading is just lose the value of a dollar. There'd be times where I would be, trying to do this full time, and I'd be bartending, and I might be up $800 on crude oil, still on the screen sitting there trying to do something when it's, as much money I'm going to make working several of these shifts. And if we're not careful, these figures, they, for some reason, outside of what would be our normal world, like these are life-changing, but then all of a sudden we very easy to disrespect them in
absolutely
what's happening in the market.
Oh, absolutely. And that's why there were a couple of things I wanted to mention, different topics. If you have some time, I could throw out at you and on things I was thinking about to talk about that kind of comes into play with this. How do you? So the first one I'm going to ask you: how do you feel about these? Because we talk about a lot in my room, these funded accounts, these things versus trading your own money. You think it's valuable for? Because I'll give you my take on it, but I'm curious how you feel on those.
Yeah, I think that they are very good. I think that they are, they have to be handled in a certain way, and they're very easy to get finessed. So you need to know what's happening, and you need to know how to navigate it. But I think it is an incredible bridge between trying to learn something in a simulator and then making that transition live. And the process of trying to do that it can be very, very taxing. If you take, even if you're doing this right and you say, okay, this much money I'm dedicating to my trading, and I'm only putting in a quarter of that position as my initial funding, so that if something goes crazy, I'm protecting myself here. Even if you put in $5,000 of your own money, when you see that go away, and the very nature of trying to learn how to trade, we have to make mistakes. It's impossible not to. And every time we make mistakes, the market is going to take money from us. And the process of making that transition has to be one of the most difficult things that we have to do as traders on the come up, is making this transition to a live environment. And when we can do a funded account where there still is risk to reward, we put in money, nominal compared to what we could be losing on our own. And we have the benefit of, I can get a funded account that I can start making money with this week if I pass. That creates that dynamic. And so I think it's very important. I don't think there's a good reason to start trading and go to trade your own money directly. I think that if for nothing else, to help make that transition and help you get the proof of concept that you need for your trading business, should happen in a funded account. And then if you want to, from there, go trade your own money or something, but at least you have a tangible result. This is the other thing I think is really powerful. People that come even through Trade Act, it is very difficult to get somebody who doesn't know how to trade to a real result. Because you can make money in the market any given day, but can you have a profitable week, or can you have a profitable month? This can take a very long time. But the process of getting a funded account, even if that doesn't directly translate into money, having that win is so powerful, just for the motivation of the trading journey has so many ups and downs and things. And when you can anchor it to a win, that's also a very powerful thing. Now, with the caveat being, I think that they are predatory. I don't think that many of these companies are run well at all. And I think they definitely have downsides, but I think they're a net positive if they're used the right way and traders aren't abusing them. And if traders aren't confused thinking that if they do something, they're going to have $50,000 of life-changing amounts of money, when the reality is that is marketing and far from what's the truth.
Well, so I agree with you on all that. If it is, first of all, it's great for younger traders.
Yeah.
For discipline, right? You have to have discipline because otherwise, you'll blow the account. They are definitely predatory. Look, it's like a casino. A casino wouldn't be in business if people didn't lose money. So these companies wouldn't be in business if people didn't keep blowing accounts. But I do think I have some. I mean, I trade my own money, and then if I'm done with that or whatever, or I'm not looking. There's no great setups. I have like a bunch of funded accounts through these, just two. Now I can say it's not right to say play with. I still want to be disciplined in it because I'm still taking money out of it. So I don't want to blow the account, even though if I blow it, okay, it's only cost me $100 and something as opposed to my money. But I think it's, like you said, it's excellent for newer traders to get that discipline and do it. But if you're doing it as a gambling option, oh, wow, this is costing me, they're always running these 80% off, 90% off. It's only costing me $35. Well, you know what? I bet you a lot of people look by the time a month or 2 months are over and like, oh my goodness, I bought 20 accounts for $35 each and I lost all of them. That adds up. Sure. So that's a foolish thing to do if you're going to do that. And that happens with most people because obviously, they love volatility. And that's another point I want to ask you on is I have a big problem with this. And I'm curious on your take. I despise the fact that so much data is released after the market opens. And for example, 9:45 today, flash PMI, 10 o'clock housing sales, 2 o'clock beige book, not today, but Fed minutes. Now, obviously, these funded accounts and gamblers love that because they love the crazy volatility. My best edge in the market is to be able to read what the market's doing. When the market gets absolutely jerked around because of these releases, it doesn't do me any good. What is your take on it? Do you like that kind of volatility? That's not the volatility I like. I'm curious on your take on that.
Well, I gotta say, Paul, before I answer, it's not very often I find myself in a position where somebody flipped the script and starts interviewing me.
I'm sorry. I hope you don't mind.
It's a nice little change of pace.
Because these are some things that have been on my mind, and speaking to you about them, I think is to see.
No. I feel like a burden has been off my. I feel like you're pulling half your weight here, so this is great. This is a really great question, and from the perspective of what we do, which is very similar. I think we have variations of it. We're relying on market-generated information. This is very much a technical analysis type of an approach. And when there are these fundamental type events, everything goes out the window. It just doesn't matter. Like when these things are being reactive, that trumps everything. Now, with that being said, as traders, our lifeblood is volatility. And when the volatility is higher, our earning potential is higher. Not to say we can always take advantage of it, but the potential at least. And when the volatility dries up, our earning potential dries up. And the way that I've had to handle this, and there are plenty of news events, especially when we have like those 9:45, 10 o'clock combos, a lot of times that messes up something in the morning to where you might have something kind of doing it, but you can't get involved right in front of this. And then maybe we're drifting away from where you want to enter and the news keeps pushing it. So the whole idea just got ruined. I mean, if I had a nickel for every time that's happened. So with that being said, when we have these outsized kind of events, especially like the FOMC minutes, to name one of the larger ones, what I do is I've had to just make an adjustment on this where I'm not heavily relying on what has happened, like maybe up until that point. I'm treating this as a fresh something, as a catalyst that is now ushered in something different. And starting from that place where that happens, I'm trying to put together what's going on. And what I've had to do is develop some ways to try and take advantage of that volatility, which goes outside of the realm of my exact method and goes more into the realm of being reactive and trying to get in flow with what price is doing, which is a little bit more hectic. I actually do enjoy it.
Okay.
And that kind of fast paced even, and again, kind of that volatility. And even inside of the chaos of some of these news events, there are some very repeatable type of action that we see. My bread and butter, and something that I wish happened every single time, is we have an event that has a very strong reaction. We get the initial move, some type of a pullback that goes for continuation on that initial move, and then we eventually work our way back to where the news event started. And a lot of times we even have that happen fairly close to the actual event, which just creates, some of these taking candy from a baby type of situations.
Mm-hmm.
So it's an interesting thought. I don't think I've ever thought about whether or not how I feel about it, just because it's always been a part of my trading that, it happens. I've never entertained the idea of what if all the news releases happened before and we just dealt with the pure movement during the day, or what kind of a utopia that would be. But I definitely handle those things very differently when the news is going on. And it's really just the outsized events, like some of the medium type tier events where we're just going to be jolting around a little bit. That's not what I'm talking about. Right. I'm really talking about something very specific, like non-farm payrolls, FOMC, something where we can just see like, a mental type of reaction.
Okay. Yeah, I mean, see, I don't trade them at all. Like even today was an example with the market going up. And we spoke about this last time. When the market's really strong one way, a lot of times on the 15-minute turnover, the algos will fire that way. And then on the half hour also. But we had that coming out at 9:45 today. Plus you have the Bank of Canada that was having their rate thing at 9:45.
Yeah.
So at 9:44 today, I'm like, generally, I would look for a long right before that, because I would think at 9:45 the market fires up somewhat. I didn't take it. Mm-hmm. To me, it ties my hands. Especially like think about when we're waiting for the minutes at 2 or the beige book at 2. The market like just dies between 12 and 2 o'clock waiting for it. To me, that's this is my livelihood is 6.5 hours. I don't like the fact that 2 hours of that is taken out of play, basically, a lot of times. Yeah. So, I was just curious. I would think most traders might think like you and like it. I'm probably in the minority on that, where I would rather just rely on, like you said, the utopia of just market generated information throughout the day without those type of things. But I was just curious on
what a world that would be. I think.
I was just curious on your take on that.
Yeah, very good. What else you got for me? Keep what else?
Well, here's another. Well, I wrote a couple of things. Here's another one. I think the market, the potential to teach high school and college kids the market profile is an incredibly untapped potential. And I've thought about how to get into it. I live in South Carolina. We have a lot of colleges down here. We have the Citadel, which is right downtown Charleston. They have a trading room, from what I understand. I'm curious on your take. How do we tap that untapped potential to teach these kids? Because I do have some young people in my room, and I love teaching them because they're just so open to everything, especially the market profile. These kids have grown up on video games and everything. Not that the profile is a video game, but they're going to see it so much better visually than a lot of people. I think they'll pick it up much quicker. So I'm wondering on your thoughts. I'm thinking about talking to my high school here, a couple of colleges. I would love to teach the market profile as a course or something to those type of kids that want to learn. And especially another thing to interact, the same thing, is how do we get more women involved in trading? I know they're out there, but my room is majority male. So again, I think if we would have tapped colleges, high schools, things of that nature, I think you would also get that demographic into trading. I'm just curious on your thoughts on that.
Yeah, let me ask you this. Is there a downside to an influx of, let's say, a massive spike in popularity of the retail futures trader? Is there a downside to people piling into the space?
That's a great question. I mean, I always say my best advantage is his profile, because I'm going to say probably, and again, I don't have a number, but I'll throw it out there. I think 20% would be high that people even know what the profile is, let alone use it.
Sure.
So I think I still think even if we were to educate a lot more younger people on it, it would be some time before your competition really starts catching up, where maybe, the profile isn't as much as an advantage as it is now. I don't think we're anywhere near that yet.
Yeah. I think that when it comes to, let's say, that age group of coming into adult and trying to find your vocation, at the end of the day, what we're doing here as traders, this is a skill set. And it's definitely one of those things where you put in your 10 years of developing that certain level of mastery, where nothing can really replace that. And, good Lord, we can have a very long run at this, as opposed to a lot of other vocations that after a certain point, they're just incredibly difficult to keep doing. And of course, for all the other reasons that we love trading, that as long as there's a strong financial market somewhere, we can do this. It's the US for now. Maybe that goes away and maybe we have to make some adjustments, but we can keep doing this. And if there's not a strong financial market somewhere, we got a lot bigger problems than trying to make money.
Exactly.
So I think, that would be a beautiful time to just start getting into this. And again, put in your 10 years, be in your late 20s. What a beautiful place to be in life. I wouldn't know. And I don't know. I would be interested to think about it myself, if I think that's a good thing or bad, because there is a part of me that knows what this journey has been like. And I would feel hypocritical not encouraging people to do it. But I would also, I think there needs to be some strong filters on just the reality of what this actually looks like to break through. And if you really are committed to this, in the long run. And so that's an interesting idea. And as far as getting more women involved, I think the secret to that is, we got to just unbutton a few buttons when we're doing our streams here. And
I don't think for me.
Yeah. Well, I tell you, I've actually noticed quite a bit of an influx of women, even since I've been trading, which hasn't been nearly as long. So I'm sure you've noticed a bit of an influx from it.
Yeah,
and I think potentially, maybe even you and I, that might not be much of our demographic, or maybe not as maybe we're not as as much of a vibe for women trying to get into the space. But even inside of Trade Act, we definitely have had an uptick in women. Obviously, still the majority men. If you look at any kind of YouTube channel, I'm sure the majority of viewers are men. And trying to get women more involved, of course, I wouldn't say is a bad thing or a good thing. I think it might always be a situation where it's always going to be a little bit more attractive to men, because this is a very insecure, eat what you kill, very much equivalent like a sales job where you got to get out there and just, get it done. And even in my lifetime, that line is getting very blurred between, if we just want to say, like that masculine energy that wants to conquer or build just for the sake of it, and that more feminine energy has no desire for this type of thing, and this type of an environment is not even attractive. I think that used to be very polarized, men and women. Now that line is getting quite a bit blurred, where we are seeing a lot more just women in general that have that drive and that want those things. And we are seeing a lot more of these, a lot more men that are being little soy boys who don't want these things. So yeah, potentially this gets flopped and we see a bigger flip of this happening. I think it has a lot just to do with this environment is very unique. It's definitely not for everybody. And you have to be in some of that type of energy that wants to be entrepreneurial at a certain level and wants to operate in the chaos and wants to not worry about a steady paycheck. These are not attractive for a lot of people.
No, it's not. I look at it, and the reason I bring these up, you see all the people in these, when they had all those meme stocks. That's not trading, that's gambling. So you wonder what percentage of those people would have an interest in really learning what it's like to trade and to try to educate and teach them. That's kind of what I'm looking at here to try to reach people like that. And that's why, again, now, again, I know people in high school, college, they most of them are on a career path, whether they want to be engineers, doctors, this and that. But there are a lot of people, unfortunately, that have no idea what they want to do coming out of high school and or college. I didn't know what I wanted to do when I came out of college. So
Sure.
again, it's something that maybe would be an avenue for them. And again, educating them, and along, combined with the funded accounts, if used properly, could be something for people that, hey, this could work.
Yeah. And I think a very interesting thing as well is not even people uninterested in trading, but of the people interested in trading, I still think that there's a big influx that needs to happen of people just moving over to trading futures. With the introduction of the micro contract, with the availability that we have to trade funded accounts, this has made the barrier to entry so incredibly small for such a great market and good products. Mike Bellafiore says you can only be as good as the products you trade. And there's still so many people that through big social media channels and through just whatever, they are chasing these crazy crypto plays, thinking it's trading, or messing around trying to actively trade these pairings on these crazy exchanges in the Forex market. And they're making it so much more difficult than they have to be, where if they came over to futures, it would just be a much better path. And that's something I've thought a lot about, is just these huge buckets of people that I think really want to do this, but they're just very lost in the sauce of what this even looks like in reality. And what it's like to just be in, having these kind of conversations where you can look at the market and you're not just chasing around entries, but you're actually putting together ideas and you're letting these shape up, and you're engaged in that skill of trading and managing yourself and the moving pieces that go into it, and doing that in a beautiful market like the future space. I think that's an interesting thing, is figuring out how to bring more people into here.
That's a great point, because you're right. It needs to be with futures, and like you said, with the MNQ and the MES, it is something that would be a great space for them. You need a TikTok. Are you on TikTok?
I'm not.
You need something to go viral on an Instagram, on a TikTok, that gets something noticed for this type of thing, for trading. That's what we need.
That's exactly right. I'll work on it. I'll see if I can put together a viral video for us and see if we can bring in. You
got to sit there on your Lamborghini like this with your Dow 40,000 hat on that my friend got for me. His company made them up for all their clients, and
nice.
And have your gold chains on.
These are some good ideas. I'm going to pass that up the chain, see if we can get something like that put together for you. Okay.
Okay.
What else you got for me?
What else? Let's see. I think we might have talked about this last time, but with your charts, and I know you don't back adjust, or do you back adjust?
I do.
You do back adjust.
Yes.
All right. So then it's a moot point, because I don't back adjust. Because
is that why you were saying we were at all-time highs earlier?
Yes.
Yeah.
Yes. So you haven't gotten it on the back adjusted yet. No,
we're still approaching all-time highs on this side of things.
See, that's okay. All right, because that's why I was saying, that's why I look at, for me, the ETF charts are cleaner because of that. Because people use back adjust. I don't back adjust. I'll ask my room, where the 20-day moving averages. I'll get 4 different answers sometimes, because this one back adjusted, this one didn't. So chart wise, for me, it's cleaner. Like when I do my videos, it's all broken down on the ETFs, on the triple Qs, SPY, and IWM.
That's so.
That's why I was going to ask you what you think is better, but obviously, since you back adjust, you're going to be using the futures charts.
Yeah.
Okay.
That's what I say.
Okay. So, how far are we then from ES? Offhand?
I don't know what all-time high is offhand, but we're approaching for sure. We're not far off from it. If we have a couple more good pushing days, we'll be there for sure.
Okay. So,
Uh-huh.
all right. So that was one question I had. Trying to think what other. I wrote a couple of things down. We've covered most of them.
I feel like you've come more prepared for this interview than I did.
Not at all. I love bouncing ideas off different people and stuff. I think I'm going to really be in the minority on that data one about having it released before at 9:30. I think most
Sure.
people would want it during the day, but
That's our little afternoon fix of getting the action in.
exactly. So, but yeah, no, that's all I have.
Okay. Very good.
How about you?
Well, if you're done with me, then I guess I'll.
Where are
thanks
you,
for
by
having
the
me.
way?
It was a
Last
pleasure.
time, what country were you in last time when we did it? I forget. Were you in?
Oh, that's a great.
Were you in
That's a great question. I don't know where I
You were in
was.
Argentina, I believe.
Oh, very good. Sweet, sweet Argentina. Fond memories there in Buenos Aires for sure. That's very possible.
Where are you now?
I'm still very much on the path of just growing my hair and filling my passport. And I am currently in Medellin, Colombia. I came here just right after Christmas for a retreat of sorts. And then I've been here for 1 month. I'm leaving actually this weekend. So I just have a couple more days here in Medellin. I'll be doing a very quick little stop in Madrid for a long weekend. And then I'll be in Cape Town for next month.
That's awesome. That's awesome. Good for you.
Got to be the good life. Yeah, thank you. Thank you.
That's great. Well, if you ever get to Charleston, South Carolina, I'd love to meet you.
I would love that as well. I've been to Charleston before. I would love to go back and see how it's
So-
changed. It was very much on that come up when I was there. This has been years ago, so I will definitely put that on the dream board.
Okay.
And if I'm ever close by, for sure I'll let you know. And if you ever, find yourself leaving the U.S., you let me know.
I will. Absolutely.
Very good.
This was fun.
Yeah, this was great. Thanks for hanging out. Thanks for chatting with me. I'll actually turn it over for you to just say the last word if you have any goodbyes to say to anybody, and then we'll end it here for the official recording, and then I'll say goodbye to you in just a moment.
Awesome. Well, I want to thank, I know a lot of my trading room watches this. Hopefully people that follow me on Twitter and Instagram do. Again, people could follow me on Twitter at Paul Asmar and the number 5. Just would love people to come check us out, what we're all about. To give, look, I had so much given to me when I was learning, when I was on the trading floor. I really love and enjoy giving back. So hopefully we get some people that want to come and check us out. But
very good. Well, I appreciate you, Paul, and keep that sunny disposition. Keep doing what you're doing, and hopefully we will talk again sometime, and potentially in person. I would love that as well.
So would I. Thank you, Aaron. All right.
Have a great rest of the day.
You too. Bye-bye.
Goodbye.